Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of February 2nd, 2025 or 2026. Let's get started. SEAF signals for this week: energy, materials, and industrials. Energy looking extremely strong with ones across all three time periods. Materials coming in with just median scores through all three time periods, and industrials being held up by its tactical month strategic quarter with scores of 13 for materials and industrials. Communication services knocking on the door with a strong trading week. Seeing a little bit of relief here in technology with the three in the trading week after having some deep 11s in the tactical and the strategic. And kind of showing that reverse inverse pattern for healthcare as we go from 2 to 8 to 11 for healthcare. Looking at our heat map for this week. As you can see here, the real strength here really relies on energy, showing all three time periods with overall one. We are seeing some nice accumulation come up in the tactical month of the strategic quarter. On the trading week, last week, 0.43%. So we had that significant inflow that we were needing to see. Again, with energy, we've kind of highlighted that we've had some real ups and downs in terms of not seeing that money stick. It appears as of right now, we are seeing some trending going in energy, and that money is starting to stick around. Materials, nothing really to write your home on in terms of materials. We're going to take a look at the rainbow chart in just a minute, seeing a little bit of nice relative outperformance, but no real overall strength and flows, but that consistency of having all three time periods at a relatively known number give us that score 13, and we are in a SEAF signal. And industrials comes back in after healthcare takes a big drop with this negative 0.5. So that's a significant outflow here for healthcare on the XLV. Again, industrials showing negative 0.10 on the week, but showing some remaining accumulation here. Tactical month and strategic quarter, we will need to see some inflows here next week for that signal to remain. Overall, light numbers across the board. As kind of been mentioning, there's seemingly some hesitancy amongst investors in terms of trying to make outsized bets on any one particular sector. Right now, that bet is coming in on energy. There is some weight being thrown behind those energy bets, but outside of that, not seeing a ton of flows. Again, outside healthcare having some negative outflow after being near the top for the previous weeks, but overall, again, these light sells, the reason they're kind of muted, dictates that we're not seeing a lot of accumulation. What does that mean for the model going forward? Strong flows on a trading week with weaker flows on the tactical month or strategic quarter can push these sectors up from the bottom to the top. And we are seeing that in the resulting rainbow charts in terms of like the relative outperformance and showing that strength. So that's kind of what we're seeing here. 3 of 5 days were inflow days in terms of assets under all 11 sector spiders, assets under management for just under 1% at 0.78% increase to the total 11 sector spiders last week. Bringing our total sector AUM, it's a good time for this. We are nearing all-time highs in terms of it, or reached all-time highs this last week, northwards of $352 billion for the 11 sector spiders, if you add up all their AUMs together. As you can see here, this has been a relatively good chart in terms of when we spend time above that 21-day moving average, nice price appreciation in the S&P 500. We are sitting nice above that 21-day moving average, which means according to this particular indicator, the overall market has room to run. And for those of you that are new or haven't heard this before, the reason I'm looking at this is I want some kind of reasoning behind the case to show you why SEAF works. And this is why SEAF works. Assets flowing into the 11 sector spiders tends to show positive price appreciation to the S&P 500. Meaning, if we are tracking exactly where those assets are flowing and where they're accumulating, we theoretically can find those sectors that are going to outperform the broader market. Heading into our heat maps, our rainbow charts. Energy. Haven't seen energy up in this upper favorite in quite a while. Again, right now ranked 3 across 3, which is as high as we can go. So showing some strength. We are seeing some sustained flows, which is good. And what is that doing? That's correlating with some relative outperformance versus SPY. So energy showing what it looks to be a bounced off a relative bottom here, and showing, again, nice upward trending relative outperformance for energy. Materials. Materials has had a good run. Now, materials is a little bit slower. It's not as large of a pie of the sector spiders, but overall seeing some strength. Definitely, as we have kind of touched into a void and started working our way up, we've increased, showing that nice relative outperformance versus SPY. I would like to see some increased numbers here in terms of the overall bets taken, getting some more assets flowing into the materials space to get in that upper favored. But materials has been a good place to be. As you can see here, again, as we've kind of grown up into this favored, touching into neutral, playing with neutral here, as we touch the void, nice relative outperformance versus SPY. Industrials. Industrials kind of touched back down. It fell out of SEAF signals as it touched down to neutral. I don't know if it actually officially got into neutral, but touched down into neutral a little bit last week. Have had a little bit of a rebound here, and it looks like we got a kind of a local bottom here on the relative performance versus SPY chart after that a bit of a pullback. We did have a nice little run up, so that could have been profit taking. It'll be interesting to see. We are negative on the trading week by only slightly in terms of the inflows for industrials. So we'll see if a new trend is emerging. Is this going to be a rebound, and we're going to take this up a little bit back higher after some profit taking after that really strong relative outperformance move for industrials, or is this a new trend down? Not yet to be determined. This is a SEAF signal this week, so I would like to see the next trading week show some a little bit more strength to kind of get us in this more middle to upper favored territory to continue this uptrend in the relative outperformance versus SPY for industrials. Communication services, knocking on the door. Wanted just to kind of give that a highlight here, especially with industrials showing that 8 on the trading week, and communication services showing positive on the trading week. So a little bit of an inverse move here. The strength coming from more near-term flows from communication services, which is the inverse of what's happening with industrials, where they're getting a little bit more from the accumulation of tactical month and strategic quarter. But it is in a favored status at 14, so just only 1 point away. So I just wanted to kind of highlight where we're looking at in terms of communication services. Again, looks like we've found bounced off a little bit of a relative performance bottom here, a little bit of support line down here, starting to trend in the right direction in terms of its relative outperformance versus SPY. A little bit. It's got some resistance here to clear out, but if we can continue to see these flows kind of trending in this direction that we're seeing, 0.23% on that week, so not a super significant flow, but for number 2, it's not too terribly bad, and just kind of an area to watch. I don't know if this is necessarily lead-off status yet. I know sometimes I like to highlight a little bit of an abrupt move from what we're actually tactical month and strategic quarter showing slight near zero but slight negative flows. So if trend continues here, we pick up another week next week. Don't be surprised if communication services is able to wiggle itself into the top 3. Consumer discretionary. Consumer discretionary is currently sitting here at the bottom. We've really not gone too much anywhere. We're trending a little bit down in terms of its relative underperformance versus SPY, but more or less holding firm with the broader market. This is really a sideways pattern going back to March of last year. So really nothing too much to do here in terms of consumer discretionary. We are heading in the avoid, and this is trending slightly down. So not a place to be at the moment for consumer discretionary. Last but not least, wanted to just highlight healthcare. So healthcare took a little bit of a header from what was upper favored status, and we had a bit of time sitting up in that upper favored. Picked up some nice relative outperformance here with healthcare over the last couple of months. Touchdown into neutral. A little bit of a sell-off, as you can see here, trending in minorly trending in the wrong direction in terms of its relative underperformance versus SPY, but still trading in a box that it's much more or less been in since November of last year. So I just wanted to highlight, just because we did see that significant negative outflow for healthcare on the trading week, which kind of dragged this down. We do still have some accumulation in the strategic quarter here for healthcare, but this is kind of a gaudy red number here, so things not looking in the right direction for healthcare. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. And thank you.